Good morning, ladies and gentlemen, everybody. Welcome back to your pre-market stream. Thanks for going in. What can I say? It is a bloody, bloody day for AMC, folks. It is not looking good. Not looking good. But that's okay. That's okay because the world will probably go on. Things will be just fine. Everybody will live, hopefully. So, anyways, we're going to get into today's analysis. I gotta say, hasn't been the hottest market today. There's been a couple things that have moved. NLSP, there was a small move in DTSS, and then there was a small move in, there was another one this morning. OCGN moved. But anyways, we're going to cover all of that. So let's hop into it here. We're going to go full screen. Give me just a second. Alrighty, so this is what we're looking at with AMC. So yesterday, we had mentioned that this box here, so we had mentioned yesterday that box was your support, okay? In that you needed to hold above this gray box or these two red horizontal levels on AMC, or else you would see the markets go lower. So you will see pre-market and in after hours or towards the end of the day yesterday, we held the support. We tried to bounce overnight. Pre-market, we held the support. We even created like a little flag pattern here pre-market. Broke up. Markets were not strong enough. The sellers were in control, and the markets came back to their support, broke through, bounced, retested the resistance, sold back off. Later in the day, it went through a squeeze right back to the red line for the most part, a little bit shy, sold all the way back down. The market has almost reached its next levels of support. Its next levels of support are going to be right here. And since this would be the first attempt of AMC on new support, it is more likely to have a better bounce. Yesterday, you'll remember I mentioned on AMC that AMC had prematurely bounced on support like maybe last week. And that when that happens, it sucks in buyers and then creates additional selling pressure that can then break support. That happened yesterday. Today would be the first attempt at support, so therefore it would be stronger as opposed to, say, something like yesterday's situation. So, anyways, all I'm saying is the green box is going to be your next buying zone. I will say this, I am slightly hesitant to even trying to buying this little dip only because this trend down is pretty strong. And if you look at its motion, it's a stair step down. So we'll go down a little bit, 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 bounce, down a little bit, down a little bit, down a little bit. We're not just selling straight down with really big candles. It's kind of a stair step motion. When that's the case, you actually have a better chance of breaking supports or resistances. But considering that we are close to what can be a support, we're still going to have to follow this for a little bit of a bounce zone. But anyways, you determine if you think it's going to hold there or not hold there, but this is where we should see some sort of attempts to bounce the market today on AMC. Now, let's say that this market does bounce. What would be the long target on the way back up for a truly successful bounce? So if we do get a legitimately successful bounce here on AMC, then we would probably target back to pretty much those two green lines. So your target selling price for AMC, if we do a legitimate bounce, would be back up here. That would be your selling target. So if we do a successful bounce, we would bounce from here all the way to up there, and you would sell that move. Okay? That's a successful bounce. Alrighty. Why can't I see your live stream? I'm not entirely sure why you can't see it. I mean, you're on the live stream right now, but are you having issues actually seeing like me on the screen? I would have no idea why that would be the case. AMC inverse cup and handle. Yeah, you could be seeing some sort of formation like that. You could see, we've done that. We've come down. So yeah, maybe you get that bounce we're talking about, brings us back up to about this zone, and then the market rolls down, right? So that would make a cup and handle. I can't believe people are still using technical analysis on meme stocks or any stocks for that matter. Market's fake as fuck, manipulated to hell. The price is what they want it to be. Mr. KVNCNLS, I don't know if this is your first time tuning in, but if it is, I highly suggest maybe tuning in for just another couple days. After a couple days, you'd probably be able to realize or determine for yourself whether or not what we do here on this channel is relevant or not. But so far it is. We generally give the most accurate price levels of AMC on the day, probably across any YouTube channel, but it can't be for certain. So definitely consider just giving this channel or just a couple of the streams a try for the next couple days. But generally speaking, most oftentimes, I would say maybe 80% of the times, the levels that we give for AMC generally do tend to trade correctly. So just give it a try. What's the number for the bounce? Oh, the number for the bounce. Yeah. So the numbers for AMC would be and let me rephrase this. The lowest risk, okay, generally would be anywhere in the zone of 30.20 to 20.67. Mr. Montero, I've just been really busy this past couple weeks. I've been traveling, and then having do some work on my rental property. So it's just been a busier week for me. Don't have as much time to. But I do believe probably, where we in July, the start of September. Starting September, I'll have kind of a new schedule on the YouTube. I'll probably be here a little longer, so just know that towards end of August, towards September, probably going to do like a slight schedule change where I'll be on YouTube a little more. All right, so Connor, quick question. I know you have a video on margin versus cash account, but just want your opinion on which is most productive for swing trading. Well, the most productive thing for any investing would be making money first, right? So the most productive thing you can do is hopefully be on the right side of a move. Aside from that, you just weighing pros and cons when it comes to cash versus margin. The only reason you'd want a margin account in relation to what you said, this isn't the only reason, but based on what you said, the reason you would want a margin account is so that you could just basically get back into trades quickly. But if you're swing trading, then generally speaking, you shouldn't have to do that unless you're wrong and you had to sell a position and then you were eager to get back into another position. So again, that would loop back to my original statement, which is the first important thing is making money and making sure you're on the right side of a trend. Because if you're on the right side of a trend on a swing trade, you're probably going to be in it for 1, 2, 3, maybe 4 or 5 days or whatnot. You're generally not going to be in the swing trade for, a day. Well, a day would work, but you're not going to be in it for a couple hours, and you're generally going to try to be in it for more than a day. But sometimes the move happens, and it happens in an hour, or sometimes it happens in just a day, and then you're going to want to sell. But generally speaking, for most swing trades, will be in more than a day. And the only reason you would need a margin account in that sense is that if you had to exit a trade and you wanted to get back into a trade immediately, you could do so with your broker's cash after you've already spent yours. But cash account would just allow you to have more flexibility. Or it would allow you to have more flexibility because You won't be restricted to the pattern day trading rule. So if in the event you're trying to swing trade and you end up hitting like the 3-day trading limit per week in the 5-day trading period, the cash account would allow you to trade all 5 days. It just kind of gives you more opportunity to be in the market more often, as opposed to having a margin account and maybe restricting yourself to the 3 trades. If in the event you don't catch the right swing trade, you have to close one today. You try to open one the next day, and then you had to close it that day. You've already used 2, and now you're on to your 3rd. And if you take another trade, you have to close it that day because you're wrong. Then you've hit your day trade limit, and then you know how that story goes. Whereas if you had a cash account, you could disperse enough money that way you could open up, say an account of $1,000. You could split that up into $250 a piece, and then you could have a trade for Monday, Tuesday, Wednesday, and Thursday, and just repeat it next following week. So that's really your difference there. Yeah, dude, this shirt is the bomb. I love the Avengers. Yeah, we can take a look at Tesla real quickly for sure. Let's see. So everybody knows my thoughts on Tesla that stays into the channel. Pretty much we thought that, we weren't wrong. We're wrong, but we were right majority of it. So, this was our recommended selling target on Tesla. So here, that was our recommended sell target for Tesla out of this flag pattern pennant breakout. So we did, then we pulled back, then we bounced, and we went right back. You can see we went right back up to resistance, right? If we go look at, God, I'm I don't know if I'm low on sugar or something, or I'm just becoming slower as I get older, but shit, I cannot think very well today. So if we look at this time frame, you can see we have this half deviation price. You can see in this adjusted, it might not be as perfect today or yesterday as it was right now, or is right now, but you can see you have that half deviation price there. We go to the 4-hour chart, you're going to see the regression trends there. And so, when this move was coming up, I think yesterday we looked at Tesla and we pretty much said this was your desired target for that long move, and you're probably going to see some selling pressure. But that's pretty much it. You can see that's trend. We bounce back to trend. That's primarily why we're selling off. This downside move, I think could still come down to 642.60. 642.60 is definitely a price I could see Tesla continuing its pullback to. Would actually this kind of is becoming a little dangerous in the sense, because if Tesla continues to trade sideways and we can't get over this mean, then we're going to end up doing a rollover. Okay, so again, if the price of this market on Tesla cannot reclaim its yearly or half year mean, then the market will do something like that through the -1 deviation support. Okay, so when I say, so if I was like, oh, what's going to happen when the market breaks through that line? It's going to have a big sell-off. Well, realistically, it's more or less probably like this. When the market breaks through this mean, or not this mean, sorry, when the market breaks through the -1 deviation trend, that line going over, snapping through, support will be breaking. So that is kind of a thought I was thinking of for Tesla, but that's a pretty far prediction for the time being, given how we're positioned. David, I don't know what stock you're referring to. If you're referring to AMC, then AMC is gonna, I don't know, I'm just guessing, but because that's the only other one I talked about, I think. But if you're thinking about AMC, if it were to break the 2980s, then not that it's going to go here, but I myself wouldn't want to buy it. So let's say we actually break AMC. Let's say we actually break this support, okay? Where would it go to next before I would want to buy it? Or what would be the 2 things that would have to happen to the stock that would convince me to buy it, right? So after, say we break, support breaks, so the original thesis was, okay, we're going to bounce the green, but if that doesn't work and it breaks, then how would you want to be long afterwards? The 2 things I would have to see if that scenario happened would be either it sell all the way down to the price of 20, hold on, this would, you can already see I already have them ready. They're already there. So I'm glad you asked. I already put them on this morning. I just didn't think that the market would fall all the way down there, so I didn't think I'd have to even touch on this part of the analysis. But since you asked, if the market were to break that support, then the next level I would look to be buying off of would be all the way, down here, which is at like 22 to like 21. And then there's also the case that we break this support and it's a false breakdown. Just as you can have false breakouts on the upside, it could be a false breakdown. But if it was a false breakdown, the only way I'd want to be buying then is if we broke the green box, then we sold down, got bought up, and came back up and started breaking above those lines. Because this is support. As we break it, it becomes resistance. But you can have a false breakdown where the market really wasn't supposed to break down, and then people start to see it as a good supply area or good demand area. They start to buy it up because they think now it's actually below support, meaning there was a false break, shouldn't have really broken support, but now that it's below, it's even more on sale, so then they buy it up, and then they force out short sellers who thought it was going to break down, and those short sellers will most likely have a full-blown squeeze as they would get pushed up back through this level. So it's either hold support, bounce, breaks down slightly, gets bought up, comes back over the red box, forces sort of like a pennant breakout bull flag or something. Or somehow it just keeps selling all the way down. I don't see a low risk level until this green box. So this could be a complete, this whole zone here could be a complete downtrending move that just sinks, right? Because from the green box to the green box, those are the two levels I have for support. So it's like once we clear the top one, there's nothing that I can see that stops it until this area. Okay, and that's AMC fully. Like that's about as best as I can do. All right, I will take a look at Apple, AAPL. I mean, it's still strong, new all-time high, strong trend. You're right on 2 deviation right now, so you're supposed to see like a little red. The market's kind of been pulling back, right? I mean, we've had some like kind of, not really, like sort of. I would say right now, Apple is one of the stocks leading the markets higher. The markets are starting to kind of see some struggle. You can see we kind of broke up here, couldn't get higher, dropped, try to go higher, double top, down. Now we have a lower high rolling over. So we're starting to kind of see some selling activity on the market, and you'll notice we're right on the mean. So we're supposed to kind of see selling pressure here to begin with. So I'm kind of on the fence of seeing the markets move lower here in the near future. I do believe we can see more corrective movement. And I'll stay on that bias until the markets are actually back up and over the prices of 436.30. So for the short term, I'm thinking we can see markets moving a little bit lower, which would probably result in Apple having a pullback sooner than later. But again, that would be you timing the stock market going down to time the pullback in Apple, which is kind of fugazi. So for now, I'm still bullish on Apple. I don't really see a big red selling correction from Apple unless it was kickstarted by the overall market having a correction. Again, I'm just kind of hopping through comments. If I missed your comment, I apologize. I usually do a decent job of getting to most of them, kind of. Still buying AMC, 4,000 shares and adding daily. Lego, Mike, Lego. Will SPCE bounce? So yes, we can talk about that. SPCE to me seems kind of bearish still, like as in I don't really trust it for a bounce, but here's the deal. It's had a big sell-off. It's a very strong downtrend. I feel as if it kind of still wants to be on a downtrend, obviously because it hasn't reversed and we haven't seen green. So right now we're still on the downtrending move. What we'd be doing right now is literally trying to pick the exact bottom of this so far pretty harsh downtrending move. I guess you could argue the 4-hour chart here on the TTM has shifted to green or yellow, which can suggest that a bullish move is coming. I'll just go ahead and say it. I think the stock's downtrending. I don't really feel comfortable buying it here today unless it was, and that's really false. This is kind of a support right here. This little line at 3081, which is off the 4-hour chart. You can see right here, you have that dotted line. So I feel like the bounce we're seeing is because we got pretty close to this line, but I don't really trust SPCE for a bounce given the way it's set up, trying to catch a bottom. I don't feel safe trying to catch a bottom of this downtrend because we're not really off support. So this is something where in order to make me feel confident enough, it would have to be more of like a breakout play over a previous candle situation. Because again, we're in a downtrending move. We didn't even really touch a support. So if the markets really want to bounce here, then they have to convince me because they didn't touch support. So markets didn't touch support. If you're going to convince me that you're going to bounce, or well, if you're going to convince me it's a good long move, then this is a situation where I'd wait a little longer and I would wait until you could say confirmation, which would be hopefully breaking above a previous candle. Because most of the way I go about trading is trying to be trading off of support or off of resistance that I've identified. And if we don't do that, then I'm usually more hesitant to getting in because you could still see it come down too, which was the perfect example of the market the other day. Like this was the 100% picture perfect example of what I was like just talking about. 1 second. And you can't do it on a 1 day, 1 minute. We got to go back like 3 days. So on this day, I said that this was the support you wanted to buy the market at, right there, that bottom, okay? We had already bottomed here, and people probably bought it, and then they sold out, and then it bounced, and it took them. So it's not that this bounce was like bad, it's just you were just a little too early. You were just before support. Support was really down here. This was just close to. So whenever you're close to, but don't actually touch, you can go through a bounce, right? And then it actually breaks that low, goes to the actual support, and then it goes. So that's sort of what I'm trying to describe here with SPCE. It's that this move so far, like, yeah, it kind of looks bullish, but in reality, I don't have any support until here. So it's like we got close, but we're not quite there. So are we going to do that situation where this move ends up giving in and breaking down and actually going to the legitimate support, and everybody buying early is the one that the market makers will use as the stop loss orders to drive the market down to the actual desired price target? Probably. So I'm just not comfortable being long SPCE yet until we're actually off a support level, which I don't think this is even going to be that good of one. Or unless we were actually breaking, in this instance, maybe above the pre-market high, because that could suggest that the trend is actually reversing from a candle break perspective. And if you do me a favor, go ahead and tickle, just gently tickle, nothing too aggressive, on the like button, because it dramatically helps the stream. Thank you very much. Alrighty, now let's move forward. Let's see what time it is. 8:56, got 4 minutes. I'm just going to kind of run down the list. GameStop is trading down. It's going to continue trading down with AMC unless AMC goes moon gang, $100,000 a share. I just said $100,000 a share. So yes, ladies and gentlemen, unless AMC goes to $100,000 a share, then GameStop's probably going to continue going down. Yeah. Ooh, there's a lot of people that just tickled that like button. And if I don't get 362, or there's 350 people on, so if I don't get 300, or like at least another 200 people to hit the like button, and that tells me there's a good amount of people that don't like the word tickle. So then I'll have to replace that with another one, like maybe moist. Moist. Give the like button a little. That doesn't work. But I'm sure you guys like that word better. Consider yourself tickled. Neo, please. Oh, believe me, I felt the tickle. It's like getting poked on Facebook by 140 people all at once. It's a really good feeling. Let's look at Neo. Neo. I know Neo reached our selling targets. All right, so let's just, this box, nope, not that box. Okay. This box to like this area we'll highlight as green, boom, bing bang, Mick boom, Lego, and then this was recommended as our selling area for Neo. So pretty much the whole analysis that we kind of went through, that we've been doing, this is where our long suggestions started for Neo. This is where our selling suggestions started for Neo. It could have been a little before that, but it's been a while since we looked at it. And really 54 is incorrect. That's false. I'm making myself look better than I actually am. It was really from like maybe 47. I know it was 53. So really it was to there-ish. So that was the recommended selling target. All right. And then, I mean, we didn't really touch on where we thought this would go because it kind of broke down, and then we had already broken down. So we couldn't really tell you where it was going to go because it kind of broke down before we could even do that. So in this instance, the market has kind of returned back to where it wanted to. So the market had gone to overbought. So let me rephrase this. Okay, so follow my handy dandy little drawing. So this is low buying. That's a value. Once you get to the white line, you're no longer really at a value point. You're just kind of fair value, right? You're just kind of basic at that point. Okay, I'm not going to say the other B word with that, but you guys know. Once you're in the middle, you're basically just a basic B, okay? When you're down here, you're bad, right? You're a 10, okay? When you're up here, I mean, you probably haven't even hit puberty yet. So again, when you're down here in the green, you're bad. I mean, like you're top 10, you know, bathing suit model, probably some guy that wears, you know, Calvin Klein clothes and boxers or something, right? When you get up here, I mean, it's not even, we're not even going to talk about it, right? So in the middle, fair value, overbought, value. So market went from undervalued, value buying, back to average, normal, to overbought, selling, sold off, back to normal value. So the market on Neo, for what it's been doing, has basically just trended down back to where it kind of should be in this instance. So I think you'll still see some selling pressure, only because I kind of just want to see it tag the regression trend, which is that white line right there. So I kind of think we're going to move lower to try and tag it. I could be wrong about that though, because I don't remember if we touched it here. Because if we actually touch the regression trend here, then that means that this was the support bounce, which then means we could just kind of do a price action double bottom here. So that I don't actually remember. But I will say this, you won't see a whole lot more selling pressure on Neo to the downside unless you break the mean, right? So you're kind of good in the sense that most of the selling pressure you've been seeing is done until or if you get through the mean. So that's kind of like your oh shit moment you got to watch out for, is a break below the 4-hour mean on Neo there, which is at $42. Okay. Holy smokes. What's my name? My name is Connor. Alrighty, I am going to head out the door here, folks. I appreciate you guys tuning in. I am going to be having my wisdom teeth removed on the 26th of this month, which will be a Monday. So towards the end of this month, end of July, Monday, Tuesday, Wednesday, Thursday. I don't even know. Don't really have any plan. I'm not really like, I don't really care to get back to work after having my face ripped open. So I don't really know what my schedule is going to look like that week, but towards the end of July, probably won't be on too many days throughout the week just because I'll be having surgery and whatnot. So that being said, I will see everybody back tomorrow morning, bright and early, to finish off the week. Oh, before I go, I think it's only correct to tell you that I got my ass smoked on SGOC yesterday. I think I netted a loss of almost $12,000. Well, it wasn't only on SGOC. I traded one other stock. I can't remember the ticker. But anyways, I traded one other stock. I think I lost $1,800. And then I took a trade on SGOC that I was wrong about, and then I was right about, continue to be right about, but I was a little bitch, and I lost 12 grand. Close to 12 grand. With commission, it probably was 12 grand. So, anyways, that being said, I will see you guys tomorrow morning for another day.